Hello, guys. Thank you for joining me again here this morning. And we're going to take a look at the market this morning and talk about stocks this morning as we do, just referring to the investment club in a minute and hear what Jim has to say. But first of all, you would see that stocks are down this morning. So I just want to talk a little bit about that. We can see that there is an opportunity in oil stocks, and we see that TJX and some other stocks still seems to be doing good. But for an analysis on the market, what I'm going to do right now is go to Jim Cramer and Jeff Marks with the CNBC Investment Club, and I will definitely give you my analysis when I come back, guys. So let's go to Jim Cramer and Jeff Marks from the CNBC Investment Club.
When I watched our markets, our futures sink off of the terrible footage in China and the repression, I had a flashback to 1989 during Tiananmen Square, which was ultimately 200 people killed or 10,000 killed by a not as powerful Chinese regime. So I am saying watch the video, but do not react emotionally in our stock market because the impact is very small and, if anything, helps Jay Powell's case that inflation is going down.
Well, let's take a look at the markets today. We are down. We are following through from the sell-off in the Chinese markets. But, the S&P's down about 0.5%, but it's been kind of holding that way throughout the morning.
Look, at 6:30, this was down 0.95. Now, I don't know who trades these. They should just watch more football. Stay away. Go to DraftKings. If you're going to be that stupid, just go to DraftKings, do a little DFS. Play the over. Okay, I'm not kidding. Because if you're trading these, you really are clueless. What matters is this. When we see China go down, we see oil go down, which is very good for the Fed. They want to see oil down. And very good for us because we want to buy the stocks on weakness.
Right. The decline in oil, it almost follows what Carly Garner said last week with the charts, almost to a T, in that there's a floor support at 75. If that fails, next floor at 70. So you can see hold at 75. There's your support. And she said if it falls into the 60s, she'd be buying hand over fist.
Right.
Key thing to keep in mind, too, is that we know the SPR, the Strategic Petroleum Reserve.
It's just outrageous that they were down so much.
67 to 72.
Right.
Is the way they said they
remember,
would.
a lot of people feel this, which is that at these levels, oil is still in use. The oil companies are still making a great deal of money. And yet, and that's why they've held up. So that is the dichotomy between the price of oil and the stocks themselves. You and I talked about buying Devon. We literally this morning said that we're close.
Yeah,
we're close to buying Devon.
You're back to that 8% dividend yield off of their recently announced.
It could come down a little bit if the oil breaks.
Sure.
But I think that's the right level. And I know nat gas at 5 is considered to be an anathema to Coterra, which obviously is that amalgamation of Cabot and Cimarex. Cabot being the number one producer of natural gas with the lowest price, by the way. So look, if you don't own any of these, go to work, start buying a little.
And, it's a little bit of an interesting day because you do have oil down, you have the U.S. dollar down, you have treasury yields flat to down.
Oh.
Usually that sets up well for the market, but people are translating what's happening in China, raising concerns about economic growth, potentially supply chain ramifications. Do you read into that?
No. The supply chain that you most worry about is Taiwan Semi. Getting goods out of China is no longer nearly as important because of the second source issue after what happened last year. The story that people keep missing is the sudden decline in the dollar, which is why you see a lot of the soft goods plays, a la Procter & Gamble, go down. Plastics, by the way, keeps going down. We're missing all the positives. A dollar that is peaking is the best thing that could happen for the international stocks.
Yep. So we can.
Anyway, guys, so just let me come back and I want to talk to you about the opportunity. As you guys can see there, guys, there is an opportunity in oil stock where you could buy some oil stock. I still like PXD, which is Pioneer Natural Resources. That is down. That is the highest dividend. I keep talking about it because I think it's a great stock. But then we still have Coterra, which is 50% oil, 50% natural gas. So if you don't have any oil stock, think about it. I'm not a big fan of Halliburton because the dividend is not that strong. So I kind of want to encourage you to get into stock that has a high dividend, guys. But again, there's another opportunity, guys, in oil stock. If you don't own any oil stock, please consider picking up one of these oil stock. I would stay away from, with no tech is down, but I would stay away from companies that you're buying it on the up. We want to buy things on a pullback, not when things is up. So I just wanted to share this with you guys, this little stuff, and please take a look at tech is down too, but I would wait. We know that Apple should be reporting shortly, so take a look at Apple. You may want to buy Apple in a pullback, as Jim always say. Don't trade Apple. Buy Apple, don't trade it. So I still think it's a great stock. I do have a large amount of Apple stock, so consider buying these stocks, but please look for an opportunity in the oil stock and consider buying the oil stock, guys. Guys, if you're enjoying the content, please don't forget to comment and subscribe to my channel.